Hey there, I wanted to do a little bit of housekeeping with a couple of my trades. I feel like with that CenturyLink telephone one that I got a little carried away with my normal, trying to objectify trades to get our probability of success and failure. So I wanted to take a look at this one. We had our breakout here. I want to bear in mind that this is a descending triangle. And I always go over the Bolkowski studies. First, for a downward breakout according to his studies, we get a 54% chance of hitting the price target. Now also we have a 54% chance of getting a pullback, which since we are in a leveraged option right now, that might be damaging to us. So we might actually want to keep our stop close to $39 opposed to $40, which is what I said prior. Alright, so we have that. So 54% chance of success. If you got in the trade today, you probably actually got in an even better price. Yeah, you could get the option today for $1.10, $1.15. Very cheap, low risk. We'll see what happens. Next, I want to take a look at the S&P 500. A few days ago, I put a post out saying that it looks like we have a symmetrical triangle going on, and soon, well, not soon, eventually we'll see a breakout from that. And I was guessing around September to October. I wanted to revise that to a little earlier. Alright, so we're taking a look at, here, we'll do one thing at a time. First, I wanted to go over the 5-day momentum, which is very sensitive index. We have a symmetrical triangle up here. We also have a symmetrical triangle from the beginning of June to today forming in the momentum index. We'd be looking for a break above this blue line or below this blue line. This should give us a leading indicator as to whether the price is going to break up out to the upside or the downside. Secondly, the relative strength index, the RSI, and this is the 7-day. Do we still have any help from this? Can we draw any kind of triangle? We can, but it's still kind of a stretch. There we go. I was trying to get these lines to draw, but they wouldn't draw. Okay, what do we have? Might be a symmetrical triangle forming. Hopefully it's a continuation pattern. If it would break out to the upside, that would bring us to, let's see, we'd have a price target of, let's see, we're at 80 here, we're at 40 here. Take it back. We'd have an RSI target of about 95, which would give us a very overbought situation. Normally happens when there's a strong uptrend, so we'd expect an uptrend to resume. We could have a downward breakout, which would bring us down to about 15 in the RSI. So just based on that from overbought and oversold levels, I'd say that if the market does not resume a new trend, it's more likely to break out to the downside. Finally, just want to take a look at this for very short term. We're going to the fast stochastic. And yes, this looks like a mess, so we'll go to the 3-month. We might actually have a sell signal in the fast stochastic index, and we can even take a look at the slow, see if that gives us any help. The slow is just turning right now. The fast has already turned, is right about to give a sell signal. So we might be having a little bit more of a downtrend going on, perhaps until after this debt deal gets done. But anyway, just based on that, based on those other two indexes I was looking at, the momentum and the RSI, it really looks like that I'm wrong in my prediction that the breakout will happen in September. I think that'll happen closer to end of August, beginning of September.